Welcome to Looking at the Markets with David Modell. I'm back once again with Mr. Seth Golden of the Golden Capital Portfolio, phenomgroup.com. And he's a frequent tweeter and StockTwitser and all-around cool guy. So, Seth Golden, welcome back to Looking at the Markets.
Thanks, David. I'm glad to be back. Feels like we should be doing this every week, but I know, our schedules can only permit so much, and we're both working on phenomgroup.com as well, getting that ready to launch. So I'm just glad, we do have this opportunity right here and now to address any, end of year topics, if you will.
And it's as good a time as any, so I'm always glad to have you here on Looking at the Markets. And yes, we're both working on phenomgroup.com. Go ahead and check out phenomgroup.com, bookmark it. Now, Seth, is it actually up and running right now?
For me, for you, for our partners, yes. But unfortunately, we're still doing all the work behind the scenes to prepare for the launch, which our goal is definitely to have it before Christmas Eve. We only really have a couple of outstanding issues before we start beta testing, but I'm very pleased with how the site looks, with the different applications on the sites. We're just, in doing those last minute tweaks and things of that nature. So, it will, our goal again is to launch before Christmas Eve. We do have a VIP registration, where we're giving out the monthly discounted rate to our premium content on the site. So coming very soon.
Very cool. All right, so people should definitely check that out and bookmark it. I've taken a peek at it, and it looks really cool. And for people who want to get involved with not only Mr. Seth Golden's extensive research on volatility product trading, retail stock trading, and other types of trading and investing, but also the social media aspects. There's going to be a chat room. You're going to be able to, get in touch with some of the best and most informed traders and investors, in my opinion, in the world. So, get involved with phenomgroup.com sooner rather than later. All right, let's talk about some VIX products, shall we? My favorite kind of trade. Yeah. Now, Seth, if I'm correct in my interpretation, you've expressed the idea that as long as corporate earnings are generally robust or at least adequate, a large-scale market crash is unlikely. Now, did we in fact see subpar corporate earnings prior to the crash of the year 2000 and the crash of 2008?
Yes, yeah, without question, actually. I'll actually, let me pull up, right now. So, the market crash in 2000, happened in 2008. The great, I guess it was not recession. The financial crisis. But, when I look at the actual, quarters leading up to that crash, the S&P 500 earnings did in fact decline on a year-over-year basis. So the S&P 500 earnings declined 8.48% in Q3 of 2007 from the year ago period, marking the first negative quarter since 2001. So there was clearly indications that the economy was kind of rolling over, and that there was, rumblings under the surface of what was, coming, which was the financial crisis. So corporate earnings are a, they're a very good tell on the state of the economy as well as the health of corporations. And I've not witnessed a time where corporate earnings didn't foreshadow, what was coming in the next 6 to 9 months, or let's say 2 to 3 quarters. So, yeah, definitely Q3 and Q4 of 2007, earnings were rolling over. They were negative on a year-over-year basis.
Got it. And so, as somebody who likes to short certain VIX products, such as UVXY, VXX, TVIX, if you, for example, if you went on to phenomgroup.com and wanted to know when to get out of that trade, you would have that kind of research, and you might actually be able to let people know, hey, let's lighten up on some of these positions. Would that be something people could look forward to?
Yes, absolutely. I mean, I track earnings every single quarter, not just the earnings as they're coming out, and I always focus on the S&P 500 earnings. That's your biggest exposure. So yeah, I'm tracking that every quarter. The estimates, because sometimes intra-quarter the estimates for the totality of the quarter will come down or they'll go up. This particular quarter, they have been shaved off a little bit. The original estimates for the Q4 period were just above 11% for the S&P 500. And now it's right around like 10.5, 10.6%, which is still fantastic earnings growth for corporate, for the S&P 500. So we are in good shape in the fourth quarter. We had a really strong Q3 and Q2, S&P 500 earnings seasons as well. So, people start, oh, the market's just going up every single day. Well, it's starting to, rationalize its PE multiple out to 2018. And as far as the eye can see, Q1 is expected to have really strong corporate earnings growth as well. So, I mean, things are looking good. But so far as at phenomgroup.com, that's the type of material we'll be publishing in our exclusive research reports, so that investors can monitor on a monthly basis, have the estimates changed by FactSet or by Reuters, have the estimates come down or gone up. And if you're just an index player, that's great. To have that information is great, because maybe you just want to play the spiders or the QQQs. More than likely, as the economy goes, as earnings go, those will continue to rise, lifting the sectors within.
Sure. Now, how do you even measure the health of corporate earnings? You mentioned analyst estimates, but I mean, is there some sort of earnings indicator that can be used, or is it necessary to analyze all of the dozens of earnings reports that come out every quarter?
Right. Yeah, that's a good question. I guess, healthy, I think of it in terms of, the S&P 500 companies and the different, sectors within the S&P 500, the energy sector, the materials, information technology, financials, utilities, telecom, I mean, there's so many, right? But yeah. I want, some of the big ones, the ones that are really the drivers of the economy, to be, to carry the bulk of the S&P 500 expected earnings growth. So, I want the energy sector to show good earnings growth, or, the estimates to be strong for the energy sector, information technology, financials, obviously. And maybe lastly, consumer discretionary, because, that's the biggest component of our economy, is consumer spending. And if consumer discretionary companies are expected to have strong earnings, we are in good shape. And so I would say those four key sectors: energy, information technology, financials, and consumer discretionary. If those are showing strong earnings growth, we will have a healthy S&P 500 earnings quarter.
Got it. And as we segue into the new year, 2018, I get the impression that things are at least adequately healthy in those sectors that you mentioned right now?
Yeah. I mean, I can, I didn't pull up the, my FactSet estimates right now, but I believe that most of the sectors that I outlined, like, financials and energy and consumer discretionary, most are expected to be growing double digits. Information technology as well, which is really critical, the tech sector. Most of those are expected to report double-digit earning growth in the Q4 period. So, I mean, that's just really fantastic. And we're coming off of 2 quarters of double-digit earnings growth. So, People always say, oh, the market, like I just said, they can't figure out why the market keeps trending higher. This is double-digit earnings growth.
Yeah.
That's why. I mean, not to mention, that, you can't really get yield in other asset classes. You're not getting the best yield in the bond market.
Right.
So
there's no other place for investors to go, practically.
maybe Bitcoin.
Bond yields don't even keep up with inflation. Most people don't want to deal with real estate, house flipping, or being a landlord, whatever. So it's stocks, it's equities. That's
Right.
where it's at. So yeah, between that and the fact that corporate earnings are reasonably robust, at least for the moment, I'm going to keep on shorting some of these VIX products every time they go up.
Blame you.
Yeah.
If you do it responsibly, you should do quite well.
Right. And I'm learning to do it responsibly. Absolutely. I'm learning from you. You're my mentor in this. By the way, is there ever a situation in which you might actually buy or go long UVXY, TVIX, VXX? For example, this doesn't happen very often, but if the VIX goes under 9, a few times it's happened, I noticed that it comes right back up above 9. So in a situation like that, might you actually go long one of these VIX products?
Want to answer this the right way.
Okay.
So that people don't get hurt.
Gotcha.
The reflexivity below 9, even below 10, is pretty robust. So once we get below 10, it doesn't stay there very long, and you can expect a spike in volatility, and you can expect some, price appreciation in the VIX ETP, like you said, UVXY or TVIX, VIXY, and the like. Having said that, I wouldn't do it. Okay, it's a personal preference. I wouldn't do it because there are other mitigating factors, to consider, not just the level of the VIX.
Right.
And one of the, some of those mitigating factors are, the level of contango. Contango can offset a great deal of the VIX. So the closer we are to expiry is also important. The VIX itself, or the VIX futures, tend to track the spot VIX price the closer we are to a VIX futures expiration date.
Right.
So if we're only a couple of days out, the movements are going to be, very much in tandem. And as VIX futures go, the ETPs tend to go as well. But again, you have the mitigating factor of contango. And if that's just really elevated, where it doesn't, sometimes it's not going to matter, what the VIX itself is doing. You may not get a decline on that day in you may not get a price appreciation that day in UVXY. If contango is 15%, 16%, 17%, and yet the VIX is up, let's say, on the day 10%, that is not going to guarantee you that UVXY will go up. It just won't. And the other part is, did you get in at the right price, when trading started, to maybe take advantage of, an intraday scalp, if you will.
Yeah.
So it's just really difficult to time a long trade with these products because there's so many mitigating factors and variables to take into consideration that are working against you.
Sure.
They are not working in your favor.
Yep.
I want to stack the deck in my favor with my positions. And I know if I'm going long, it's going to take a lot of luck. That's just not how I prefer to play. But I do concede that a majority of the time, when the VIX has dipped below 10 or let's say 950, dipped below 950, and the reflexivity has been rather quick, sharp, and shown price appreciation for UVXY and TVIX.
Sure.
Those products. So I concede that. I just, it was short-lived. Every one of those spikes in the price of these products was very short-lived. So again, it's not just where you get in. If you're so lucky to time a good entry, you've also got to time that good exit point to actually take that profit. And it's just really difficult.
Yeah, as for me, I don't have that kind of luck or that kind of skill, so I'm not going to do it either. Gotcha. All right. Now, a lot of people who watch this probably have small or smaller trading accounts. They might not be able to short UVXY, TVIX, VXX. They may not even have permission to do that, or they just may not have enough liquidity, enough cash in their account to be able to do that. So I'm always trying to think of ways that people, maybe they want to join phenomgroup.com, but they don't have huge trading accounts, investing accounts. But I think they can still get involved in the volatility product trade. And by the way, that's not all you're going to find on phenomgroup.com. There are retail stock trades and investments and other investments as well, and we can talk about that. But for example, would it be possible when the VIX spikes a lot, maybe somebody could use options to trade, such as buying puts or put spreads on VXX? UVXY, or maybe purchasing calls or call spreads on SVXY, which is optionable. Would you agree with those types of trades?
For smaller size accounts, yeah, that's the best option, I guess. Especially because they're more than likely not permitted to participate by shorting shares outright. The strategy that I think works best, if you are using options, is selling calls. I think that's the best strategy, and the reason why I think that's the best is, you can get the equivalent, by buying puts, but the issue that you're going to have there, especially in a sideways, days, if you will. Is theta decay, and that can prove problematic. So when you're selling calls, you're actually, it works in your favor. Theta decay basically works in your favor, and you also can collect a small premium. So that, I believe, would be the best way to do it, by selling calls.
Sure. Oh, and that's what I do. But again, I have enough liquidity that if I get assigned, I can take a short position in 100 shares.
But you also have to check your brokerage if they'll actually allow that. Yeah.
Correct. But again, there are ways, I think we can both agree, even people with smaller trading accounts, they can get involved in this type of trade. And again, if they go on to phenomgroup.com, if they sign up, we can make allowances for people who don't have necessarily 6 or 7 figures in their investing account. So I think that's good news for a lot of people who watch this. Speaking of phenomgroup.com, I'm just curious about, we've talked about the chat room. That's going to be in phenomgroup.com, which I'm definitely going to be heavily involved in. What's that going to look like? Are they going to see you in there? Who's going to be in there?
Yeah, I'm pretty much going to be there daily. I mean, I've done a lot of, participating in social media for the last couple of years, putting my trades out there, in real time and everything, and kind of, helping people with, the VIX strategies, with retail trading and investments. Consumer product good investments, and showing people that there's real genuine insight out there that you can glean from others in the social media sphere. So we designed that aspect of phenomgroup.com so that if you sign up for just a basic membership or a contributor membership, you can participate in the chat rooms. You can talk with other traders. You can talk to me. I may not tell you, I generally won't give you advice just because I don't feel it's the proper medium.
Sure.
But I can answer questions about, what, a complex strategy, or, what I think of a company and what I think about the market and the economy, and other traders that, are on phenomgroup.com can jump in as well and give you their take on it. And it's a really good dialogue that can take place. And the best part about Phenom Group's chat rooms or messaging back and forth, if you will, is it's no nonsense. I mean, you're not going to get this, some of the things that you get in social media, like on Twitter or on StockTwits, where people are calling each other names and, chastising each other. That's not going to happen on phenomgroup.com. It's going to be very intelligent conversations and very, passionate sharing. It's real level sharing with people and trying to, answer their questions and guiding them possibly to, make better choices with their investing capital.
Yeah, I'm totally looking forward to the opening of the chat room and of phenomgroup.com. I know that spaces and spots are limited for getting involved in phenomgroup.com. I recommend people should, if they're serious about getting involved, email Mr. Seth Golden. The email address is right there on your screen. It is seth.golden@coolingsit.com. And by the way, Seth just talked about how he is involved in social media. You definitely want to check him out on Twitter. The Twitter handle is @SethCL. Also on StockTwits.com if you're a StockTwitser like me. And over on StockTwits, he is @SethMarcus. Now, in a previous video, you mentioned the bond market because I asked you, what types of things do you look at besides roll yield, contango, corporate earnings. We're talking about the big picture here. Before you take a short position in a volatility product, what are things you look at? You mentioned the bond market, and I never really thought to look at that before. Why should VIX product traders pay attention to the bond market?
Yeah, I mean, I wouldn't say it's specific to VIX. I think it's just, for all investors, especially where we are in the market right now. We're at all-time record levels, and the economy is humming along. Corporate earnings are doing strong. But at some point there is a diversification of your allocation that coincides with where can I kind of curtail risk yet achieve a strong yield on the capital that I invest. And like I said before, you still cannot get that in the bond market right now. If you look at the 10-year yield, that's your prime rate is based off of, I think it's we're at 2.35%. And we've been stuck in this really tight range for a long time now. And and a lot of people are looking at the probability of the yield curve flattening, maybe in the next 6 months or so. And there's somewhat of a panacea about should that happen, what it will do to the economy and the market. So they lump it in. They say every recession and market decline has been foreshadowed by a flattening of the yield curve, and I concede to that fact. It's clear as day. That is what has happened. But it's a big but, because we've never had the central bank activity that we have today in the past. It's just a very different marketplace. It's a very different financial system that we're operating under to actually drive the economy, which in turn drives corporate earnings. So while I don't think it's safe to say, I'm going to put it that way, I don't think it's safe to say that should the yield curve flatten or invert in the next 6 months, it will elicit the same response in the economy that it has in the past. Okay. But the market will prepare. If it sees that coming, the market likely will prepare for the worst, meaning it probably will, take some of the profits off the table, if you will, and wait, and kind of wait for the economy to show me, and the corporate earnings to show me the money, before it says, okay, not as bad as it was, in past decades where, markets either crashed and economies went into recessions after, shortly after a yield curve flattening. So I look at that, and for me, the level on the 10-year that I kind of draw my line in the sand and saying, okay, if it holds above here for a certain period of time, we are likely going to start seeing rates ratchet higher over the next 6 months. And that level for me is 2.42% on the 10-year. If it can hold that, for at least a few weeks, we are probably going to start marching steadily up to 3% over the next few months. And that's going to raise some eyebrows. That's definitely going to raise eyebrows. It's definitely going to make portfolio managers and hedge fund managers think twice about how they're allocating money. And that in turn is going to bring about a certain amount of volatility in the market. So going back to volatility traders, that's why you got to pay attention to the bond market. Because the bond market may feed into the equity market, which may feed into volatility. So it's also why I've said I don't anticipate 2018 to mirror the absolute complacency in markets that we've experienced in 2017. Right. I really don't think that's going to happen for 2 straight years. It seems far-fetched.
Right. It won't be necessarily as easy as it was in 2017 to trade these products in the coming year. Yeah. We've been lulled into a certain amount of complacency in 2017, so we really need to be on our game over the next year and beyond. I totally agree with you there. Now, as a VIX product trader, I know that you prefer to keep a large amount of liquidity, a large amount of cash in your portfolio. At least 50% is my understanding, and up to 80% possibly at any given time, depending on, because I know that 20% approximately is your core holdings, right? Short VIX products holdings, and that means that up to 80% could be up to 80%, and at least 50% of your portfolio is probably going to be cash at any given moment. Right. Now, keeping so much cash in your portfolio, does that make you feel restricted in terms of other trades you want to make, other investments, retail trades, whether it's Costco or Target or whatever? Do you feel restricted because you're keeping so much cash?
No, I've never, the beauty about working with common shares, after hours and pre-market and during the trade hours is you can always hit the exit button on any position. So from that standpoint, my liquidity is always 100%. It's just a matter of how I'm, what the environment looks like. So I do, with that cash that I have, and folks can see on social media, on Twitter or on StockTwits, what I'm doing with that cash daily or weekly. I'm taking positions in retail brands, Target and Macy's and Kohl's and Twitter. I've traded Twitter several times. So that's how I've been using, the cash to make trades and building, my capital along the way throughout the year. So I never feel restricted. But what I would say is, should there come a time where That's my dogs. Let's switch venues here.
There we go. It's okay. No problem. A little bit of volatility going on there in the household. Got dogs barking. Not a problem. All right.
So, what I would say is, should there come a time like 2015 where volatility went through the roof?
Oh, yeah.
And, you basically had to have as much liquidity as possible. I would take off, any positions that I had on in other instruments.
Right.
Why? Because I know ultimately my greatest reward is going to come from playing that volatility spike.
Yeah.
So I wouldn't have any, worries or concerns, if I was in a trade on Apple, and I wasn't even up, maybe I was down on that Apple trade. But volatility spiking, there's headlines in the media that this is going on and that's going on, and this is probably going to last for several days. I'm okay with taking a small loss on that Apple trade just to shore up the cash and make sure I have liquidity while my existing volatility instruments are going against me.
Yeah.
You know, because I want to put that capital to work. You know, as UVXY is heading higher, as TVIX is heading higher, I want to layer more positions on because I know ultimately this volatility is going to peter out.
Yeah.
It's going to make its way. All these, you're going to have that decay that, comes after the spike.
Yep. As it has time and time again. All right. And so finally, as far as phenomgroup.com goes, if somebody becomes a member of phenomgroup.com, and things start to really go haywire as far as you're seeing red flags, whether it's in the bond market, whether it's in corporate earnings, or for whatever reason, would you be able to perhaps caution people? I know that Phenom Group, the purpose is not to tell people what to do, but would you be able to at least let people know that you're scaling back, or that there are red flags out there? And what would that look like?
Yeah, absolutely. My subscribers would get their typical research report or research newsletter, if you will, informing them of how I'm positioning, and what I see in the market. And, hey, we've already achieved X amount of profit on the year. It may be, time to exercise more caution, reduce risk. Yeah. And enjoy what we've already accomplished. So far as, going into 2018, some of the things that do concern me are, we are going to get a rate hike in December. I'm almost positive we're going to get a rate hike in December. Mm-hmm. More than likely, we're going to get one in the first quarter of 2018. So those are some key factors that, may start to, shift the balance of equity to bond holdings in a way that causes some volatility. Sure. And then, there's the geopolitical environment as well. That still, is you can tell it's just bubbling up underneath the surface. We have the midterm elections that, it doesn't get any bigger than that. The House, the Senate seat, midterm elections, this could be just a really powerful, variable for the market to contend with. Yep. So, there's a lot that's going to go on, and, I'm going to put all of those thoughts onto paper at phenomgroup.com and informing people of, different strategies that they might be able to take advantage of if they're more risk adverse. Or if they're more risk tolerant, and maybe they want to, layer, more positions on. All subscribers will have access, direct access to me, can email me at any time, ask me what I think about this, that, and the other. And, I will oblige them what my thoughts are, at any given time and what I see in the market. So, to answer your question very succinctly, all my subscribers will get exactly what I'm doing, how I'm looking at the markets, and what I see ahead.
It's so important to have a mentor if you're going to make this type of trade. If you're going to short volatility products, you have to know what you're doing. You have to either do the research yourself, and if you out there watching this, if you have the time and the ability and the expertise to do all this research yourself in the bond markets, with corporate earnings, so on and so forth, with the macroeconomic picture, with roll yield, with contango, hey, if you want to do that yourself and you have the ability to do that and the time, be my guest. But if you'd rather let a world-renowned expert in all of those areas be your mentor, be your guide to help you with that, and to let Seth Golden do the work and take the time to do the work so you don't have to, then you probably want to get involved in phenomgroup.com. Hey, have a mentor, whoever it is, just have somebody who has done this type of trade over and over and over for years, successfully at that. Okay. And
one of the other features at phenomgroup.com is if you are one of those, savvy investors with a really good fundamental, base of knowledge on the economy and how the markets work and how different sectors of the markets work and how different products work, you can set up your own profile on phenomgroup.com and start your own blog. We'll publish your work right there on phenomgroup.com. Develop your own following,
Cool.
your audience, and it's really a great way to help the community with your voice, the community of investors with your voice and your experience and your knowledge base. I'm not the only one who's going to be sharing, with free content as well as with, premium content on phenomgroup.com. And we hope that, folks who are good, articulate and have, a strong expertise are willing to start their own blogs, because, we're going to have a really extensive readership to address.
I'm definitely looking forward to it. Once again, to get involved in phenomgroup.com, you want to email Mr. Seth Golden sooner rather than later, because the spots are limited. The email address is right there on your screen. It's also in the description of this video. It is seth.golden@coolinksit.com. Also, once again, check out Mr. Seth Golden on Twitter. His handle there is @SethCL. And on StockTwits.com, his handle there is @SethMarkets. Did I miss anything, Seth, today? I always seem to miss something.
I closed out a bunch of profitable trades today. I'm thankful for.
Yep.
I had strong shorts on Kohl's, Macy's. I had a very nice long position. Well, I've done two very nice long trades on Twitter. One I did post, one I didn't have time to. But so far as what am I doing with the spare cash? It's not just sitting. I mean, it's there on the sidelines, but I'm always looking for an opportunity. Yeah. And again, those are the opportunities that I will be delivering at phenomgroup.com to our subscribers. It's the trades that I'm making. In real time, you'll get your email alerts to the trades. My entry, or the desired entry, if you will, and the desired exit. In this particular market, there's certain, the retailers are infamous, if you will, for being, range bound. And, you can trade them in the same price range time and time again. You can trade it down, and when it gets down to where it tends to be at its lowest point, trade it back up. Yep. The best part of, about doing that is doing it with comfort. Yeah. And, so the retail sector, I have an extensive, base of knowledge and history in. So I can support those trades should, they not go according to plan right away. I can support them with research and fundamentals long term if I do have to hold on to it. So that's another facet that you're not really going to get just in social media.
Sure, absolutely. Wow. So I'm definitely looking forward to the grand opening of this website to the public. I'm looking forward to the research. I'm looking forward to the community that's going to be formed here. And you're going to see me on there a lot. And you're going to see Mr. Seth Golden on there a lot. So hopefully, you'll continue to come on looking at the markets. Give us updates on the website and on how you see the markets as a whole. Thank you once again, Mr. Seth Golden, for coming on to Looking at the Markets.
Thank you, David.